with the ships and all the likes, right?
Mm.
So if that is not working, that means you can't export. I did mention in the last episode that Tungela did say that the thermal coal industry in South Africa has lost over 30 billion rands because of those issues that have been
30
billion rand because of those issues that are happening
in Transnet.
in Transnet. So you can imagine that even with all the issues that other miners are actually also facing, because that is kind of like the most common transportation and logistical to kind of facilitate the exports.
So like, for example, we have the goods.
Yes.
We have it ready.
It is not a production issue, it's a logistical issue.
But now the transport, in order for it to get from us to our customers overseas, our transport is a problem.
Yes. So it's like you're farming things in Limpopo. We've got avocados, we've got oranges, we've got all those things. But those things need to be transported to the biggest markets. That's, for instance, thermal coal. The biggest market is Europe and China. Right? So they need to transport those things to Europe and China. But they can't export because Transnet is in shambles. So that becomes a problem in terms of getting that revenue, because nobody's going to pay for the goods that is still in South Africa.
Absolutely not. FOB. FOB.
So it's that thing, man. Like that is worrying a lot of CEOs of mining companies.
Yeah.
There's been a lot of discussions around what the mining companies are trying to do to solve the issue, and engaging with government to partner where they can and the likes.
It's difficult. I saw the announcement today on the Sense, on the stock exchange news service, Sense, that Transnet have actually now organized their board. They've reorganized the different committees on their board. And I was not filled with confidence. Which is very, very unfortunate, especially as a owner of a Sasol share. But you more so, because you own Anglo Platinum.
Yes.
And it's lost 10%. Is this all down to Transnet?
Yeah, like I said, it's partly down to the issues that were happening at the exports, right? Yes. I mean, they've got the production is there. I mean, look, when it comes to commodities, right, it's a volume and price game.
Yes.
Right. So you're a price taker as a commodity producer, like a miner, right? Because the price is determined in the market. That's why Tungela did come out and say, for thermal coal, look, the prices in 2022 was X amount. It was whatever, 200 and what per ton. And then in 2023, then that price kind of more than halved.
Yeah.
So you can imagine that revenue, because that's the direct revenue.
That's revenue. That's the price of the good that you're selling.
That you're going to sell. Correct. So as a price taker, you've got a lot of all these issues that are so out of your control that you can't do anything about, right? So that's one element.
Yes.
The pricing of PGM as well for Anglo-American products.
Yeah, this is the Anglo Platinum.
So I'm moving on to Anglo Plat.
Yeah.
So for Anglo Plats, it's a couple of issues, right?
Cool.
So we've got the pricing issues. The PGM prices have collapsed in the market currently.
Yes.
So that obviously hits you directly into the top line.
Yes.
And that is your top line.
That's your top
before
line.
You pay anything else, before you even pay the CEO that earns exorbitant bonuses and all those things, that's your top line.
Exorbitant.
Right?
You went there.
Hey man, it worries me all the time.
You went there. Okay, but
to be fair, if I was sitting in that chair as well, having to worry about all these things that have nothing to do with me and outside of my own company's control, I'd also want to earn exorbitant amounts, right? Unfortunately, we live in a capital economy, and it is what it is.
It is what it is.
But anyway, let me not digress too much. So yeah, it's that, right? That the PGM prices have fallen down because of demand uncertainty. Like I did speak about the demand elements in the last episode, that we've got the green hydrogen economy. We don't know. People are uncertain whether there's going to be enough investment to kind of drive that demand for the PGM materials, your rhodium, your platinum, etc.
Palladium as well.
Yeah, so that's one element, right? So it has collapsed, and even the high inflation thing, all those things, right? So when it comes to the specific things in the South African context, you've got Transnet issues.
Yes.
They're pervasive to all the miners.
Yeah.
Right? You've got load shedding.
Yeah.
It's
you're mentioning like all the existential stuff.
Yeah. I'm going from the global
yes
to
the local
country.
Okay.
And then I'm gonna delve into
Fantastic. I love that's that approach that we spoke about.
Yeah, the top.
Yes.
The
top down.
Yeah. So that's what's happening on the global economy.
Yes.
The price of the thing collapsed, and that's what's happening in South African context. I don't need to educate anyone of the issues that we're facing.
We know.
It's real.
Very, very well.
It's real out here. Very, very. But then when it comes to the company itself, right?
Yes.
They did have an issue with the smelter. I did mention that this was
you
the
did.
last.
You mentioned it.
And in the smelter in
Check
Polokwane.
It was episode 4.
Episode 4.
Episode 4.
So they did have an issue with the smelter that took time to come back to life and actually kind of smelt the materials that they're mining and all of that. And then secondly, there was an expansion issue as well about their mine in Mankweng, right? The strategy around how to expand that. And also they've not been investing a lot of capex into that. So their costs have increased because we are in high inflation environment. They've been trying to catch up with the guys of Impala and Northam because those guys have been investing a lot in the technology and mining and all those things. They've not, right? So they're trying to catch up and trying to catch up when the cost has already gone up.
Yeah.
It means that your investment requirement becomes higher than what the other guys spent in the last 5 years or so.
So would you encapsulate it by saying that the costs going up, what you said about the commodity prices going down, that is a very, very nice cocktail for lowering or softening in earnings?
Yeah, definitely. It is exactly that.
That's it.
That's it. That's what's happening, and obviously, that's what's hitting the thing, the share price. But also, like I said, I've mentioned a lot of things that are happening that are hitting the mining industry.
Yes.
If you look at the PGM companies, right? Right. And dear investors, welcome to episode 6. I'm not rolling alone. I'm rolling with Nico as always.
Yeah.
And today he's actually wearing a sport jersey. What's is this new money following? Are you following PSG because
of Neymar
went to PSG, or are you ancient like that during the times of Ronaldinho and the likes?
Yeah. So someone at work actually took me to task when I wore this, and asked if I'm a Johnny come lately.
Yeah.
And am I being attracted by the new money? If I was attracted by the new money, I would be wearing an Al Nassr jersey on Al Hilal. No, man. I've been following
Saudi
PSG.
money.
Saudi money. The oil money. Nah. I remember PSG during Ronaldinho. And I even remember, if I remember correctly, did Pochettino play for PSG? I forget. But like, PSG has always been in the back burner, but then they were not really dominating. But I'm rocking the PSG today, and not because of Neymar, probably because of Mbappe.
Mbappe, yeah, you're a big fan of Mbappe.
I'm a big fan, and then and you need to explain what's going on here. What's going on?
No, look, the story is I had to actually get out of a board meeting and then shoot straight to here. I didn't have time to kind of change and be on a sport jersey and the likes. We're still less serious, even though we're doing serious things about money. But here we are, and don't feel intimidated about my jacket. I'll make sure to keep one of the sports jersey in my Picanto when we.
Anyway, no, all good. But are you feeling good?
Yeah, I'm feeling good, man. I think it was a very productive day at work. And yourself, how's the tech thing going?
It's going well.
Stuff like that, yeah.
It's going well. We're launching new products there at work, which is quite good. And it's finally being rolled out to the public, which is nice. Keeps me on my toes. And yeah, it's been going well. And for those who don't know, someone is actually traveling to Europe. So yeah, hence the new attire.
This has nothing to do with my trip to Europe. It has nothing to do with my trip to Europe.
Yeah, man. Yeah. But yeah, let's get into it.
Yeah, let's get into it. I think there's a lot to cover. As we do, let's start with the portfolio check and let's see how the numbers are looking. And yeah.
So for those that have been following,
and we'll put it up somewhere here.
Yeah, we'll put it out here as usual, as per the usual. I'm actually quite embarrassed to put it up there.
You were so ravaging last time. I even made a standing ovation of one. I was out there giving Capitec all the flowers that it needs, eh?
And surprisingly, Capitec is still my fighter here. But there's a lot of red, but we're gonna get into what's causing the red. But man, it's bloody, hey. It's been a bloodbath, but we're gonna get into it. So let me start off with the usuals, and then I'll get into the new additions, and then we'll speak into the new additions. Unless if you want to say something about the incumbents, let me call them that.
Yeah.
So we have got. I'm not gonna rank them this time. But we've got
very hypocritical, eh? Like
we've got Discovery. We've got Discovery with a 3.94%. Remember the last time they were at high single digits. Now it's at a 3.94%. Got Naspers, it's in the red again. It didn't escape the punishment. It's at minus -1.22%. Then we have not Discovery. Then we have Capitec. We've got Capitec, which has also gone down. Now it's at a gain of 10.01%, which is still double digit. But
because the last time I remember it was at about 18%.
Was it 18 or 13?
Yeah. 18.
It was 18, hey?
Yeah, it was.
Now it's at oh my goodness gracious, yeah. So then it has fell from grace quite a bit, but it's still in the green and it's in the double digit. And then we have today's winner, as per the usual. But like, listen. As much as how it's a winner, it also went down. But
it's a more resilient stock.
Okay,
it
true.
shows. It shows.
No, you're right. The most resilient share in our portfolio has been ShopRite. You'll see it maintains a good return of 13.9%. So that's doing quite well. That has earned us about 17 rand, and then Capitec has earned us about $12. Discovery has earned us about 5 rand. And Naspers has been
from the original portfolio sizing that we had. Both my companies are on the green.
Barely, but
listen to this, man.
Barely. But I think let's get to the exciting things, which are the additions.
Yeah.
And with the new additions, obviously you'll speak a little bit more about it, but let me just tally up where we are first. Yeah. So on my side, I have purchased Sasol. I've purchased Sasol, the petrochemical company.
Yeah.
And red. Negative 4.71%. We've lost 11 rand off that. And then Chifiwa's his additions. Number one, it was British and American tobacco. If you recall, in our previous episode, we spoke about British and American tobacco.
And I still don't smoke even now.
Still don't smoke. But like, in fact, British American tobacco has been quite resilient because that has lost only 0.42%. So 50 cents.
Yeah.
And then
the bloody one.
There's this one here, Anglo, which is by far our worst performer. And not only just because of dilution, but we'll speak about the dilution. But this hasn't been performing quite well. And we're going to spend some time on it. It's Anglo Platinum. Anglo Platinum is sitting on the red by minus 10%. But in rand terms, it's only lost us 12 rand and 50 cents. But the percentage is minus 10. You'll see it's going to be at the top. Fire away, mate.
About Anglo or Platts?
Let's start off with. In fact, let's start off with
But
BET.
I mean, BET. I did chat a lot about BET, right? And that I said, look, BET is a long-term bet for me. Pun intended.
BET is a long-term bet.
Yeah, BET is a long-term bet in terms of, I think the company still has a lot of to think. Just in fact, the whole industry has a lot to think about and figure.
Yeah.
With a lot of regulatory changes that are happening. I mean, the new products that they're developing, the vaping and the likes, that seems to be doing very well, and people seems to be buying those stuff a lot. Some of the things that are environmentally friendly, because regulation is kind of moving that. We're moving towards a greener economy. And the tobacco industry is one of the first one that is actually being transformed by that regulations all across the world. Even it's not even a South African thing, and there's a couple of taxes that are coming through as well in that sense. But I think people are always going to be smoking. That's always my go-to point. I mean, do I think people are going to stop smoking because we're going towards a greener economy? No, that's not going to happen. But it's just a matter of reinventing yourself to kind of operate within the boundaries of the legal regimes that are being passed in that particular time, right? Which is now. So for me, it's a long bet, right? That I have on bet.
It's not a short bet.
It's really not.
It's not a short bet. It's a long bet.
It's more of a long bullish kind of thing on it, that I believe that the company is going to do well, and it's relatively affordable. I mean, to be fair, the tobacco stocks are pretty much affordable at all times, really.
Yeah.
And
don't you get squeamish like whenever you see the minister go up in Parliament and talk about syntax? BET, Einhauser and Bush, they always get nailed, man.
Yeah, but I mean, it's part of it. It's things that we expect. To be fair, right? That you expect there's gonna be a great punishment all the time when during the budget speech that the tax on this is going to increase in this way. We expect those things to happen. But let's see how it happens with the new kind of regulations going towards greener things, because they kind of incentivize companies to actually go that route to be greener. So maybe it's going to be less tax and more towards fining. It's when you're not complying with the regulations. It's not necessarily, it's a tax. It's fixed. There's nothing you can do about it. But when it's a compliance issue, then it changes the whole game, and the margins become slightly better compared to when it's just a pure tax on it.
Yeah, I understand. I think it's quite interesting that if we're going to be moving to a new regulatory regime, that it's not just going to be like a tax of which they and these companies simply just pass it on to the consumer.
Yeah,
knowing full well that these
what I was actually thinking about. It's a bit of a digress.
Yeah,
but what I was thinking about was more especially on the like on the food space, right? I was just like, but think about it, when there's an increase on inflation and production costs and all of those things, right?
Yeah.
What happens is they kind of push those cost increase into the end consumer.
They do.
But when those costs go down, they are not those decreases are not pushed to the end consumer. I'm just like, but that is such an unfair game, man.
You can't do that.
When the cost kind of changes and decrease. What they do is, we're very proud of the fact that our margins have improved. But you don't then say, as a result, then the selling price of our goods is going to decrease, and therefore we returning more money to the consumers' pockets.
Look, mate, we are investors and not humanitarians. I just think it's. I mean, bottom line,
it really
share price must move.
It's such an unfair thing. It's really such an unfair thing.
It is, and I think like if we were speaking about this thing really deeply, in that what is the role of business within society, then we have to ask some serious questions when it comes to such, because like during bad times you pass it on to your consumer, and in the good times they are not transmission down to the consumers.
It doesn't happen
for themselves, and I get it, and it really
we praise management during
it is like that,
stuff like that.
It is like that.
I guess sometimes it kind of depends on the what caused the decrease on the input cost, right?
Yeah.
If it's a technology that they invented and kind of gotten some efficiency, then
maybe.
To be fair, maybe.
Yeah.
But if it's also driven by the fact that the macro environment has kind of gotten softer or improved in that sense to kind of give that a little bit of buffer, but then we don't get to benefit from it, from that particular industry, that doesn't make sense to me.
It doesn't. And because you wear two hats. I do too. I wear my consumer hat and I complain, and I wear my shareholder hat and then I rejoice.
You are happy.
But yeah, there are many people who are not shareholders, and that are only consumers, and that aspect of it is worrying. And that's where I champion things such as this initiative that we're doing, in that we're trying to make a change, then that people must not only consume, but they must also own. And in that way, you are also on the other side of things, and that you're not only getting the short end of the stick, but then during the short end of the stick, there's some relief in the form of some of the things that you are owning.
But I guess one of the things that perhaps that happens directly is the gas, right? When the prices are going down in the macros and stuff like that, then you get to see that petrol price going down, and the like. So I guess that kind of makes sense, which I guess links to your investment on Sasol. That what was your thinking behind that? Are you bullish about the gas prices to increase? What is the rationale behind that?
So I will be honest. This has been, as far as my rationale. Because
wait, before you speak about that, you had Richmond. You abandoned Richmond.
I did.
And then you had what again?
It was it was a few. It was Sappi.
It
was Sappi. It was,
I can't remember the logistic one as well.
Which one was this again?
There's something fish.
Oh yes, Grindrod.
Yes,
it was Grindrod. And Grindrod also announced their earnings. Yes, it was Grindrod shipping. Yes, so the Grindrod, the normal Grindrod, Grindrod Limited. It was between that and also the shipping as well. I backtracked off that, and I made a very impulsive decision of going for Sasol. Something that I didn't do after very much listening to our own podcast.
Yeah.
So with Sasol, I was definitely not looking at.
The fundamentals.
The fundamentals, absolutely not, because like if you look at the fundamentals, there's a lot of mistakes that have been made here, and not only on the existential basis with the commodity price, with the price of oil. I think it's around about $30-$40. That's when Sasol breaks even. So the closer it gets to that mark, that's when things start getting a bit dicey. I recently read here that they had an impairment of about 35 billion.
What is the impairment on?
I'm actually not quite sure. I'm actually going to have a look at it later today and see. But the fundamental mistake is that I did not read before I got in. I was in, and now I'm finding out of an impairment.
But you know what's interesting about investing, right? It's you can enter blindly, and that will link very well to what I'm going to talk about when I talk about the next company.
Sure.
You can enter blindly and invest in something, right? Just an impulsive decision. Sasol, it's a brand, it's out there and all of that stuff, right? And then you find that the share price just goes up.
It's true. You can have that. And
because at the end of the day, let's be honest, right? There's definitely a connect to the fundamentals, right?
Yes.
But sometimes the fundamentals are very disconnected from the share price. Right. And that's when the share price, that's even when analysts can't even figure out why the share price is decreasing so much or going up so much and stuff like that. And that happens sometimes.
It does happen. And I think let's even break it down for our investors in that a share price is moved by supply and demand. If people think that the share price is going to go up, they're going to flock to that share. The demand for that share is going to go up. It's going to push the price up. Okay. So with the fundamentals of a business, that speaks to the competency of not only the board level to provide the leadership, but the management level to actually act on that and move the company forward on its fundamentals. So when it comes to Sasol, processes of actually not only mining but also beneficiating, that speaks about the fundamentals of Sasol. So things like a project, for example, in Lake Charles, which didn't go well the last time, that spoke about the fundamentals. And in this case,
and this is the very same Sasol that you made $1 million from.
but like, yeah, you're never gonna drop that. You're never gonna let that go. But like, no, but you're right. I was just trying to expound in what you were saying, in that sometimes there can be a disconnect because as how they're supposed to be connected, and indirectly, yes, they are. You do get a bit of inefficiencies, and that gives rise to the disconnect. Yes. But that's Sasol. So with Sasol, for me, I think with our next Instagram live, I'll definitely be more versed with what's actually going on with Sasol. But like they released the trading statement, and goodness gracious, hey, 84% of their earnings went down.
Yeah.
That is worrying for me. Okay, more than more than just the commodity price. Although maybe the commodity price actually informed that drop in earnings, but volumes and also obviously the logistical factors which are carried out by Transnet.
I mean, look, for a South African company, right? There's already geographical issues that are happening in South Africa. We've got the biggest one is load shedding.
Yeah.
Right.
By far.
That is the biggest one. And because there's load shedding, costs for production, especially even in the mining sector, is becoming very high because they need to burn diesel or make an alternative for the energy, right? That they need and stuff like that. So it becomes an issue. But also we've got the elephant in the room, which is the state-owned entities.
It's a problem.
Transnet is really losing a lot of mining profits out there. So you can imagine the issues this is what makes CEO of mining companies not sleep at night. Yeah. Transnet. And that's why they're advocating to kind of get into the table with
let's get into
it. With the company, with the SOEs, and actually solve this problem.
Mate, let's actually get into this thing because we throw the word Transnet, and it's especially this week, this past 2 weeks, where these companies have been releasing and announcing. Transnet has to be the common denominator. So let's get straight into it. Why is Transnet a problem for these mining companies?
Because they organize all the logistical transportation on the ports. They manage the harbors and all those things. That's where you transport big piles of oil with the ships and all the likes, right? So if that is not working, that means you can't export. I did mention in the last episode that Tungela did say that the thermal coal industry in South Africa has lost over 30 billion rands because of those issues that have been 30 billion rand because of those issues that are happening in Transnet. So you can imagine that even with all the issues that other miners are actually also facing, because that is kind of like the most common transportation and logistical to kind of facilitate the exports.
So like, for example, we have the goods.
Yes.
We have it ready.
It is not a production issue, it's a logistical issue.
But now the transport, in order for it to get from us to our customers overseas, our transport is a problem.
Yes. So it's like you're farming things in Limpopo. We've got avocados, we've got oranges, we've got all those things. But those things need to be transported to the biggest markets. That's, for instance, thermal coal. The biggest market is Europe and China. Right? So they need to transport those things to Europe and China. But they can't export because Transnet is in shambles. So that becomes a problem in terms of getting that revenue, because nobody's going to pay for the goods that is still in South Africa.
Absolutely not. FOB. FOB.
So it's that thing, man. Like that is worrying a lot of CEOs of mining companies.
Yeah,
there's been a lot of discussions around what the mining companies are trying to do to solve the issue, and engaging with government to partner where they can, and the likes.
It's difficult. I saw the announcement today on the Sense, on the stock exchange news service, Sense, that Transnet have actually now organized their board. They've reorganized the different committees on their board, and I was not filled with confidence, which is very, very unfortunate, especially as a owner of a Cecil share. But you more so, because you own Anglo Platinum.
Yes.
And it's lost 10%. Is this all down to Transnet?
Yeah, like I said, it's partly down to the issues that were happening at the exports, right? Yes. I mean, they've got the production is there. I mean, look, when it comes to commodities, right, it's a volume and price game.
Yes.
Right. So you're a price taker as a commodity producer, like a miner, right? Because the price is determined in the market. That's why Tungela did come out and say, for thermal coal, look, the prices in 2022 was X amount. It was whatever, 200 and what per ton. And then in 2023, then that price kind of more than halved.
Yeah.
So you can imagine that revenue, because that's the direct revenue.
That's revenue.
That's
the price of the good that you're selling.
That you're going to sell. Correct. So as a price taker, you've got a lot of all these issues that are so out of your control that, you can't do anything about, right? So that's one element. Yes. The pricing of PGM as well for Anglo-American products.
Yeah, this is the Anglo Plat now,
So I'm moving on to Anglo Plat.
Yeah.
So for Anglo Plats, it's a couple of issues, right?
Cool.
So we've got the pricing issues. The PGM prices have collapsed in the market currently.
Yes.
So that obviously hits you directly into the top line.
Yes.
And that is your top line.
That's your top
before
line.
You pay anything else, before you even pay the CEO that earns exorbitant bonuses and all those things, that's your top line.
Exorbitant.
Right?
You went there.
Hey man, it worries me all the time.
You went there. Okay, but
to be fair, if I was sitting in that chair as well, having to worry about all these things that have nothing to do with me and outside of my own company's control, I'd also want to earn exorbitant amounts, right? Unfortunately, we live in a capital economy, and it is what it is.
It is what it is.
But anyway, let me not digress too much. So yeah, it's that, right? That the PGM prices have fallen down because of demand uncertainty. Like I did speak about the demand elements in the last episode, that we've got the green hydrogen economy. We don't know, people are uncertain whether there's going to be enough investment to kind of drive that demand for the PGM materials, your rhodium, your platinum, etc.
Palladium as
well. So that's one element, right? So it has collapsed, and even the high inflation thing, all those things, right? So when it comes to the specific things in the South African context, you've got Transnet issues.
Yes.
They're pervasive to all the miners.
Yeah.
Right? You've got load shedding.
Yeah.
It's
you're mentioning like all the existential stuff.
Yeah. I'm going from the global to the local. The country.
Okay.
And then I'm gonna delve into
Fantastic. I love that approach that we spoke about.
Yeah, the top.
Yes.
The
top down.
Top down. Yeah. So that's what's happening on the global economy.
Yes.
The price of the thing collapsed, and that's what's happening in South African context. I don't need to educate anyone of the issues that we're facing.
We know.
It's real.
Very, very well.
It's real out here.
Very, very.
But then when it comes to the company itself, right?
Yes.
They did have an issue with the smelter. I did mention that this was
you
the
did.
last.
You mentioned it.
And in the smelter in
Check
Polokwane.
It was episode 4.
Episode 4. So they did have an issue with the smelter that took time to come back to life and actually kind of smelt the materials that they're mining and all of that. And then secondly, there was an expansion issue as well about their mine in Mankweng, right? The strategy around how to expand that. And also they've not been investing a lot of capex into that. So they are their costs have increased because we are in high inflation environment. They've been trying to catch up with the guys of Impala and Northam because those guys have been investing a lot in the technology and mining and all those things. They've not, right? So they're trying to catch up and trying to catch up when the cost has already gone up.
Yeah.
It means that your investment requirement becomes higher than what the other guys spent in the last 5 years or so.
So would you encapsulate it by saying that the costs going up, what you said about the commodity prices going down, that is a very, very nice cocktail for lowering or softening in earnings?
Yeah, definitely. It is exactly that.
That's it.
That's what's happening, and obviously, that's what's hitting the thing, the share price. But also, like I said, I've mentioned a lot of things that are happening that are hitting the mining industry.
Yes.
If you look at the PGM companies, right? Your Impala, your Northam, your Anglo-Plat, your Sibanye-Stillwater. We'll show the chart here, right? You'll see at least all of them in the last, I don't know, few periods.
3 years.
You'll see that they were down at least right now in a month or so. They're probably down like 10% or something, right? Like let's for example, if you have it open, let's check Anglo-Plat. We just mentioned it's down 10%. How much is Sibanye down? It's probably down 9% in a month. Impala probably down 7%.
So it's a little bit more. So Anglo-Plat in this last month is down 22%.
In the share price, yes.
The share price is down 20%.
But in the last year or year to date, it's down 50%.
Yes, correct.
Yes.
Correct.
And then what about Sibanye?
Let's have a look at Sibanye. There we go. Over a month, right?
Yeah.
Sibanye over a month, it has been down roughly about 7%.
7%, yes. Yeah. And then what about Impala?
Let's have a look at Impala. Impala Platinum. Impala Platinum. There we go. Impala Platinum share price. Sorry. Let me just quickly, I'm just getting it. Here we go. Impala Platinum share price over the last month has been roughly 24%, which is in line with Anglo Platinum.
Down 24%.
Down 24%.
And then the last one, Northam
Platinum.
Northam
Platinum. Plat share price. There we go. And the Northern Platinum share price over the last month has been down roughly minus 11%.
Minus 11%. So you can already see it's not an only Anglo Platinum issue.
No, it's not.
It's an industry issue.
Yeah.
Of what's happening in the global economy and what's happening in South African context.
There's a graph that you showed me earlier on, which will show.
For sure, yeah.
And it shows literally that the movements of these stock prices have been so similar.
Correlated, yes.
Exactly. They're very closely correlated. It shows that it's not just it's not an Anglo problem, it's an industry problem. But then obviously there are certain things which are idiosyncratic to Anglo. I wanted to ask you one more thing about Anglo Platinum, and that is the leadership change of, is it
the CEO?
Yeah, the CEO. I think it was Natasha Falloon.
Yeah.
She left.
Yeah.
Is she left or she's leaving?
She's leaving.
She's leaving.
Yeah.
She inherited a mess. Is this a good thing that she's leaving? And is the next person who's going to come in?
The signaling effect, obviously, it's not. It's obviously signaling whether there's an inherent problem in Anglo-Plat.
Yeah.
And that nobody can fix, or it's a matter of, there's always going to be tension in the board when there's issues.
You don't want that. You really don't want that.
Whenever there's issues, there's always going to be tension in the board, right? And who is the one person that always takes the fall?
It's the chief executive.
Exactly. Right. So that's whether or not, either way, which one I think it is, I'm bullish about Anglo.
So
I think that these are fixable problems.
Yeah.
Let's give the new CEO a chance. Let's see what he's got up his sleeves. I mean, they've got a strong balance sheet, man. And they've got a good backing of Anglo Group. I mean, they're still 80% owned by Anglo, right? So look, I think we still can have replicate the success.
If you are right about Anglo, in fact, if you investors are taking a punt on this industry, then I think right now has to be the time to get in. Yeah. Because prices are like.
Yeah, I guess that's one of the aspects that I wanted us to discuss about. That valuation plays a big role when it comes to entering, and I think we've thrown a lot about PE ratios,
price earnings ratio,
the net asset value, the disconnect between the net asset value and the share price, which typically the finance guys would call the net asset value that you determine, not the accounting one.
Yes.
The one that you discount your cash flows and come back to value. They would call it an intrinsic value of the company. So like, you and I don't necessarily go delve into valuing a company like that because one, we don't have time. No, to be fair,
absolutely not.
We don't.
And those models, and oh my gosh, it can get very, very complicated. Yeah,
I remember my time in asset management. I used to, and I say this as if it's a very long time ago. It's not even a long time ago, but it sounds like it was 10 years ago, and it was not even 10 years ago. But anyway, so I remember my time. Analyzing a company, you're not going to know a company in the first 18 months and understand it fully. That is not going to happen.
How long?
Right?
Then how long do you really give yourself?
If you're that brilliant and then you're just focusing on that one company as an analyst for 18 months, then you can know the company, right? Yeah. Because one, you need to formulate your view about the company. And you need that feedback loop, right? To kind of see, okay, do I actually understand this company, or I'm just actually fabricating things about what this company does, right? Because the first and foremost thing to do about investing into a company is actually getting to know a company. I'm talking about the guys that do it professionally. Yes, we don't do it professionally. Yes. Actually for me to get to know ShopRite, it took me I think, 16 months.
It took you 16 months.
To actually get to know and understand in detail what ShopRite does.
So then, okay. So for our investors, should they be spending 16 months?
No, they shouldn't.
Let's speak about how
This is why I wanted us to discuss, because, now I don't go and sit and build a model of 16 tabs with inputs of my discount rates. I don't do that anymore because I don't have the time, right?
That thing is so big, and like just one variable change and then it affects
the models, and then you gotta do sensitivity analysis.
No, investors,
and stuff
like don't worry, we're not gonna put you through the ringer like that. No, we won't.
So it's obviously we take that's more like the most correct way to invest, right? To kind of get your own value, check and find a margin of safety and stuff like that, right? Cool. But then for us right now, what is it that you do to actually put a value on Sasol? Or we're not gonna delve into Sasol because you did an impulsive decision.
Very impulsive.
This is a very good lesson to all the investors out there.
Don't do what I did.
Impulsive decisions can be good, but they can be very dangerous.
They can be.
But like, for instance, to put a value on a Capitec, right? Do you just go into history and be like, okay, historically, Capitec used to be in 1,000 or 2,000 or 3,000. Okay, what has changed and all of that? Like, what is, if you can run me through your process of determining the value.
So what you said, a lot of it, that's what I do take into consideration.
Yeah.
I would like to look at it historically and what it has done. And if there's any variables that come out at you immediately.
Yeah.
Like, for example, let's speak about banking. Let's speak about Capitec.
Yeah.
Right?
Yeah.
A big driver of Capitec's growth has been its number of retail clients.
Yeah.
Okay. Now, if you're going to grow in a space of about 20 years, you can get to 20 million banking clients.
Yeah.
That is growth. That now you are driving your business forward. So if you look at that, that's a lever of that you need to look at. You need to look at the customers, and then you look at the fees as well. Has there anything been fundamentally different about what's been happening with the fees, because that's in essence, that's where you get a lot of revenue from. That's where you get your revenues from.
Yeah.
And if you see that hasn't changed, and then obviously now it comes to the management competency of how they manage the loan book. Now, these are things that you don't need models for.
Yeah.
These are things that are very much open. If you look at a company's financial statements, and you don't even have to go deep into it, because one of the things that comes up at you, it's how many clients have you had? What is the revenue? What is pushing the revenue? How much of that revenue structure is fees? How much of it is interest earned? Or you get what I'm saying? These are things that you can have a look at in terms of what has changed. And then lastly, so number one, I look at some of the levers. Number two, which is last, I look at the price of the share. How has it moved in relation to those levers? And if there is a correlation there, I think as a retail investor, you can make some sort of a rational decision. Obviously, it's not going to be a model-based decision with discounted cash flows and intrinsic values and terminal values and all that stuff. But you can understand. You can see the company has good fundamentals. Another important thing which I didn't mention as well is you need to look at the reputation and scandals that is happening.
Yes.
You try to avoid things like Steinhoff. I
think intelligent journalist, as you call it.
An intelligent generalist. Yes. That's what I call it. And I think if you can have those three things, you can gauge as to which, you can even gauge if there's a discount or if there is an undervaluing of a particular company. And that's where I think I'm camping with Capitec, and that Capitec's client base keeps on growing, and I think it's going to continue to grow.
Okay.
Right?
But I mean, is the population growing at the same growth rate that Capitec is growing? I mean, there's got to be a point where you're like, look, shucks, we've covered the broader market in terms of bankable people.
So,
right?
so that's where now you get to things like, okay, how competent is the management to be agile and to adapt? Now there comes in a decision of going into business banking.
Yeah,
we've got businesses that need banking, right? Can you replicate that strategy of actually going from the unbankable, the unbanked, or the underbanked people to the bankable that are not banked or they're underbanked businesses? And I think that's where it comes into it, and you're just like, okay, maybe there is something smart happening there in Stellenbosch. But to answer your question as to like, what do I do? What do I look at? Some of the things without getting too technical. Those are some of the things. And I just want to to recanter back my steps. Number one, I look at the fundamentals.
Okay.
Out of the business processes.
Yeah.
Out of the things that drive the levers, the KPIs.
Yeah.
And then I look at the price. And then I look, has anything fundamentally happened across management as far as scandals, as far as the reputation is concerned? And I think that has put me in good stead. And I think that's something which investors can also have a look at. Yeah, you.
And then what? Before I go, what is? When do you then decide? Okay, this is cheap enough for me to enter. Is it? Do you have some sort of?
It depends. It really depends, because sometimes when I go through my processes, not all the time. Because I can go through all of that, and then you might find out that the share price is worth 2,000 rand. You know what I'm saying? So last episode I spoke about affordability.
Yeah,
which is very, very important. Price is definitely important.
Yeah.
Another one which I look forward to, or rather I look into, it's price dislocations. So if I can see that there is some irrationality, it's something that has gone wrong in the market. Yeah. And market noise, which is something which I hope you get into, which I've identified a few times in my investment journey.
Yes.
Capitec was one during COVID.
Sasol
was one during COVID as well. Yeah. So like things like that, that's when I look at. So that's why I say it depends. I can have a go through at my rationale, but at the same time as well, if something is a clear dislocation, that's when I pull the trigger. So it depends.
Yeah. It depends. Like someone would think what's happening in the PGM space now would think it's market noise.
I'll be honest with you, mate. I think this episode, it has a PGM theme into it, and which I think it's okay. Because that's been the most topical thing in the investment world.
Yes.
Market noise.
Yeah.
I would really like for you to get into that whole thing.
Yeah.
We have conversations about these, and I think it's absolutely great content, and I think it's important that other investors have actually get into it. Are we seeing a dislocation? Is the market being irrational?
No, I think one, it's really a big question that investors are asking themselves. That is this really a production issue? It's not a production issue.
It's not a production issue.
So then what is it? And then you look into what's happening globally. Then you think, okay, what's driving the low demand or what's driving the low price in the global economy? Is this something that is temporary based on where we are in terms of the economy cycle and stuff like that, right? So how I term market noise, right? It's when there's something drastic that happens in the market and investors react, right? So for that specific time when something happens, right, there's either going to be a sell-off or there's going to be a lot of buying of stock, right?
Dramatic
buying of stock, right? So that presents you with an opportunity. If you think differently to the market, right, that's when the gap comes in for you to make money.
There we go.
Right. That's when you make money during the market noise. Market noise helps you to kind of provide a platform for you to enter, right? Because then it temporarily lowers the price more oftentimes, and then you can buy while everyone is actually thinking, oh no, shucks, I need to get out of this thing, right? That's when you're like, nah, but I don't think so. I need to get into this thing, all right?
Yeah.
And then when the price is like coming down from 3,000 to 100 Rand, and then that issue gets fixed, and then the share price goes back to 3,000 Rand, then it means that you're rich now.
Yeah.
You make $1 million like Nico.
No.
But however, I've had a personal experience as well.
Yes.
With Steinhoff, right? Then you get into this thing where you're like, okay, there is an accounting irregularity. No, there's an accounting fraud that is happening at thing. I was actually watching our episode 4, and then we were talking about the management assessment.
Yes.
And then you're like, look at Steinhoff. They had a couple of CAs on there.
Not just CAs, PhDs in accounting.
I'm like, that's where it's at, right? That's where it's at. But yeah, so for me, for example, where it can go bad, when I invested in Steinhoff, the share price, I can't remember, I think it was 4 Rand or 5 Rand. And then I bought a bunch of it, took out some of my savings, and then I'm like, that's one of my impulsive decisions, right? I'm like,
we all have that one impulsive.
I'm like, look, I think I put in at about 6K. It was very huge money for me at that time, Even now, it's still huge money.
It's still big.
So I'm like, okay, let me put 6K on this. This thing is 2 Rand.
Yeah.
So you can imagine how much I bought of that thing. Right?
You bought quite.
It was 4 Rand.
It was 4 Rand.
And then the price went half, right?
So 3,000 gone.
So pretty much 3,000 gone. Just like that. So I'm like,
impulsive decisions.
It's like that. But like I said, right? It presents an opportunity.
Yeah.
If you're wrong, you're wrong.
Yeah.
Right? And it's like that. But I did say that in the game of investing, you need to understand that you're going to lose money at some point. You're not going to be right all the time. Even Allen Gray, even Coronation, even Sanlam, even Old Mutual, all those guys, right? They do get it wrong, especially in this market, because it's not a rational market. And I think that's one aspect that people don't understand. They operate on, okay, I assume, even the textbooks out there, they assume that investors are rational investors. And they're not.
They're not.
That's why we see all these fluctuations in the market and we're able to get opportunities. Hence, this is a very nice demonstration. This is why there's fluctuations in the market,
Mate, you said something so powerful in that if you do, as an investor, And I also want to calm the fears of investors, because if you just hear what Chifi was saying, you might get scared. Don't get scared. This is a call to action, in that when there's blood on the streets, get in. This is where and it's very counterintuitive. But going back to what you said, in that you said that if you do the same things as other people are doing, that's not where the opportunity is. Because if it's a real opportunity, you get what I'm saying? You know what I'm saying? It must be rare. You must find diamonds in the rough. So, but if you do things differently to what people are doing, then your performance is going to be different.
Yeah.
I mean, surely, but whenever there's heightened emotions, whenever there's lots of irrational things going around, we tend to move with the crowd.
Yeah, unfortunately.
But I really want to drive this message home to our investors, in that the very bleak picture that Chifiwa has articulated,
yeah,
you've articulated. I think for me, that is an opportunity. We are seeing a lot of irrational behavior, and I think it calls for investors to have a cool head and to go in.
Yeah. So that's the thing. Like I said, I think when we started the Investment Candle podcast, we did say the fundamental rule of investment. You can speak to Warren Buffett, you can speak to whoever. The big thing that they're really trying to do in its simplest form, buying low and selling high. That is the simplest form to invest, right? It's like, even if in any kind of business, you buy low and you sell high.
Yeah.
The margin in between, that's your profit.
That's you. That's your prosperity.
That's your money.
That is your wealth.
That's your success.
That
right?
is.
So generally, that's what we're trying to do. Like right now, what I'm seeing in the PGM market, it's that, right? That the share prices are dipping a lot.
A lot.
Yeah. We've got Anglo-Plat, it's down 50% from last year.
Yeah.
You've got all the other guys, they're down 30%, 40%, and the likes, right? So it's cheap right now. But really, the thinking is, do you really think that there's fundamental unfixable issues? Or these issues can be fixed to a point where the share price can correct back to its normal price and you can make some money? My opinion, for Anglo-Plat, it's exactly that. That's why I entered on Anglo-Plat.
Hey, the portfolio check this week is lit. No, it's I agree with you 100%. I really, really do. And I think, we live and die about this. It's either you'll be wrong and lose your money, but then if you're right, my goodness me, there's some money to be made.
Yeah. So that's really what you explained about your valuation process. That's exactly what I do.
Yeah.
I literally, right now, because I don't have the time to build the models, I don't have the time to kind of sit down and be like, okay, I need to value ShopRite. I need to sit down and disaggregate the revenue, build the revenue, build the cash, and build the income statement, balance it, and the likes. I don't have time for that, because that's a full-time job.
You need to get paid for that. You need to get paid
It's
for that.
really a full-time job.
Yeah.
But what I do is really just to say, okay, what is really happening in the market?
Yep.
What are some of the issues that I'm like, even now on the PGM, I actually picked up on that. I'm like, okay, there's a lot of what's happening in the mining sector right now, because they enjoyed a very nice rally last year because the commodity prices were up, and people got 40 Rand per share dividend from Tungela, for example, and now the prices are a little bit tangy. So what is my opinion about this? Do I think that this is an opportunity, or do I think that the problem is still going to get worse? So that's where, from there you do you do kind of thing. So I did all the companies, looked at all of them and thought, okay, which one do I think is the stronger of them all?
Yes.
And do I think that they have issues that are inherent to the company that they can't fix? Not necessarily for Mplat, as I explained before. And then, okay, what is the PE ratio for this? How does it compare with the others? Right. And and then the share price, has it done this before?
Yes,
in terms of,
very
you know,
important.
has it gone down to 50% and gone up and all of that? And then I look at those things,
I also look at that.
And then I sit down, I'm like, okay, cool. I think I can take a chance on this company and let's see what it goes. And it's very important to also remember that it's money that you're willing to lose.
Yeah.
It's not money that you're going to pay for education.
No,
right?
no, absolutely not.
It's not money that you're going to pay for something very important and of substance, right? Because you're not doing this full time, right? But little by little, you can really build very good money out of investing, right? But don't be an emotional investor and actually just put in 100K in there without, for money like that, in my opinion, right? You'd give it to the guys that manage. There's a lot of fund managers that all of that, but I mean,
we had a whole episode about that.
Yeah. But I mean, what 100K, whether it's 100K is too much or not, that's up to you to decide. If it's not too much, it's fine. If you're willing to gamble 100K, that's fine. I'm not necessarily saying that investing in the stock market is a gamble. It's not necessarily a gamble like that. You know, it's not like I think what you're trying flipping K coin.
I think what you're trying to say is that you must have a willingness to accept that you could lose it.
Yes, that's in essence. That's exactly what I was saying.
Yeah, no, it makes
the
makes
willingness to be able to accept that I could get it wrong.
Yeah,
but that's where the concept of diversification comes in.
Yeah, so you can. Right? So for example, so like that's a risk management strategy, isn't it? I mean, what we can do as investors, and what I like doing is that I like to put myself in a scenario that if I lose small, and if I win big. You know what I'm saying? So for example, if something does go bad, it doesn't only go bad for that one thing and I put all my money into that one thing, but then I have scattered it a little bit here, this and this and that. But then when it does go well, there is no ceiling. There's no ceiling. It's can go to the moon. The price can go to the moon and come back. So I think that's when. Sorry to jump in there. That's when diversification and diversifying your portfolio comes into it. In that, that's where how now you can control your floor to a certain extent, but the ceiling still remains open. And I think that's one of the hallmarks of a great investor.
Yeah. And speaking of diversification, how diversified is our portfolio?
So looking at it quickly.
We have mining, we have Sasol, we have
we've got
M-Plant, right?
We've got Anglo Platinum, we've got British and American Tobacco. Where would you place British American Tobacco? Is that manufacturing?
No, that's tobacco.
But I'm saying in the broader sector.
I'm not sure where it's classified.
But it's tobacco. Yes, correct.
Tobacco is completely different from all the other companies.
Different. And I think it's the most inelastic as far as prices are concerned. Out of the thing that we have, which is important as a defensive strategy.
It's a very nice contrast. We've got price taker, which are miners, and then we've got price the guys that enjoy inelastic demand.
Price makers and price takers.
Yeah.
We've got Capitec, which is our only bank. Well, no, not really only, because we also have Discovery.
Yeah, but it's a very small portion.
Very, very small. We've got Naspers, which is internet consumer facing media. We've got Sasol, which is petrochemicals. And we've got a retailer and a star performer in the form of ShopRite. Yeah. Very well diversified portfolio.
Yeah. You see, so now that the PGM are down, we're not really that hurt. I mean,
we're not
hurt. We're still on the green.
We're still green.
So you see the good thing about diversification, right? That you're able to kind of pull that risk and do that. This is investment kernel in practice.
This is what we're talking about. This is like everything that we've spoken about. It's something that we've done. And you will see the portfolio. We will not hide it from you.
Yeah.
Yeah, man.
So I had a couple of questions, but I think we really touched on them already.
Yeah.
We didn't talk about how far we are in terms of our benchmark, how we're doing. I mean, we just added, right?
We recently just added. So we'll have it. We'll deal with that.
We'll deal with that later. Okay, cool. And the thingy, what's happening with Thungela? I did mention that Thungela enjoyed more than double their usual price last year. So right now we've seen even like a slash on their earnings to like 80%, 60%, whatever, because of what's happening. I think I did detail a lot from the beginning on this. Even last episode as well, I did talk about Thungela a lot.
And I'll tell you what, we have a lot of investors that are Thungela shareholders.
Really?
We do. We have a couple. Yeah, we have got a couple. I know this. Yeah.
I did detail that.
Yeah.
Another one, why has the PGM stocks been down? We will show a graph in terms of what all of them.
Impala Platinum, and Sibanye Stillwater.
Sibanye. Yeah, those are the big ones. We did talk about it, what's happening. It's the global economy, the price effects, what's softening in the global, and then we've got our country-specific problems.
Yes, country risk.
And then someone was asking, what's the use of a dividend yield?
What's the use of a dividend yield?
Yeah, in investment decision making.
Well, it depends what type of investor are you and what you're after. Where a dividend yield can become very, very important if you are a dividend investor. That is a good indicator of whether this company pays, not only pays, no, so it doesn't measure the frequency, but it measures how much the dividend actually is. So it becomes very important depending on what you're trying to go after. So for example, I'll make an example with Chifiwa here. Chifiwa went into Thungela, right?
Yep.
You use the dividend yield as a guiding star to get into Thungela. So I think you're best fit to actually answer why. But to answer that question as succinctly as possible, quickly as possible, if you are looking after dividends, and we're not all looking after dividends, some people can just have a go at capital gains, and that's what it is. It's a different school of thought.
Yeah.
A dividend yield can be quite useful because you will see how much dividend this company usually pays. If it's a high dividend yield, if it's a low dividend yield, if you're a dividend investor, you're probably not going to go there. You're probably going to look somewhere else.
No,
that's just it's important, and we're not slashing, we're not killing dividend investors. Very, very valid. You need cash flow. REITs, real estate investment trusts, they deal with dividends. In fact, for them, it's against listing regulations if you don't declare 75% of your earnings in the form of dividends.
To retain your REIT status, you need to distribute 75%.
It's 75. So yeah, it's important. But that's the importance of a dividend yield.
Yeah, I think there's nothing else I can add to that. You really articulated
Thungela?
Well. Yeah, like I did Thungela because of that. But I think even now, I think I might be up for some capital gains as well. Because look, I'm very bullish about what's going to happen in the resources, right?
Okay.
Because of the thing going down. So yeah, I'm very bullish about what's going to happen. So let's see what happens.
Let's see.
But other than that, good conversation, man. I think we really have a lot to share. We really have a lot to share. But yeah, other than that, this is episode 6 now. And we hope you really enjoy our discussion, and keep liking, subscribing, and commenting as well. Please do ask questions. You can see we try to answer all the questions that we get as far as possible. So it's very helpful to kind of guide the discussion as well in terms of what you guys are seeing in the market and the likes.
100%.
Anything from you, Mac Dog?
There's a possibility of episode 7 involving a guest.
Look at this man coming with the great news all the time.
I mean, it's a possibility. Don't hold me to that.
Yeah.
But yeah, be on the lookout. Yeah, man. And we have more than just videos. And we've got pictures. We've got interactive Instagram lives as well. Get involved. Grow as an investor. Grow with us. Follow the portfolio check. Like I said, we are not just preaching, but we are practicing what we preach.
Yeah. That's it from us.